Liabilities. A liability is a financial obligation, debt, claim, or potential loss. They are probable future sacrifices of economic benefits due to present obligations towards other entities. Liability is defined as present obligation as a result of past events, and its settlement is expected to result in an outflow of resources. Liabilities can be classified as under owner's fund, long-term liabilities, current liabilities and provisions, contingent liabilities, owner's fund. Owner's funds are amount payable to owners. It is considered as a liability due to entity concept of accounting, which assume businesses as separate from its owner, and hence amount contributed by the owner is considered as liability for the business. Owner's fund equals net worth equals proprietor's equity equals equity. Owner's fund equals capital plus reserves. Owner's fund equals capital plus accumulated profits. Long-term liabilities. The long-term liabilities are those liabilities which are to be repaid over a long period. That period should be normally of more than 1 year. For example, term loan from bank or financial institutions, debentures, etc. Such liabilities are usually classified as under long-term liabilities, secured and unsecured. Secured loans. Secured loans are loans taken on a hypothecation, pledge, and mortgage of an asset of the organization. Generally, fixed assets are assigned to the lender as a collateral security. In case of default, such assigned security can be confiscated by the lender. It usually includes debentures, bonds, and borrowing. Borrowed from large financial institutions, lease payments for assets taken on lease. Unsecured loans. Unsecured loans are loans taken without providing any security in return. In case of default, lender cannot have any control over asset of the firm, current liabilities and provisions. The short-term liabilities or current liabilities are those liabilities which are to be repaid within a period of 1 year. They usually arise from normal business transaction. Current liabilities include bills payable, creditors, outstanding expenses, etc. Creditors represents accounts payable by an organization for credit purchases made. It is also called as accounts payables, trade payables, or trade creditors. Bills payable is negotiable instrument in the form of written promise made towards account payable. Outstanding expenses are those expenses which are due but unpaid. It remains as current liability till the payment is made. It can include like salary, wages, rent, etc. if payment for every month's due is made in next month. Provision is money set aside for liability where amount cannot be substantially decided. For example, provision for tax, proposed dividend, etc. Contingent liabilities. These are not actual liabilities, but they're becoming actual liabilities, depend on the occurrence of certain events, which are uncertain. They are not recorded in balance sheet, but shown by way of footnotes at the bottom of the balance sheet. For example, lawsuit for damages against company, bills receivable, discounted, etc.
Thank you for watching. If you enjoyed this video, don't forget to give it a thumbs up. I'd love to hear your thoughts, so drop a comment below. And most importantly, hit that subscribe button and press the bell icon so you never miss an update.